Hello, greetings, and welcome to Dividend Blasters. My name is Bob. This is our 70th video. Our topic today is I'm a dividend investor, and these are my go-to ETFs for investing in chip companies that are going to power the artificial intelligence or AI revolution. I find this fascinating. This is something that I just love reading about and learning about. And I think as investors, it's good to know what we're investing in. So there's really two purposes of today's video. The one purpose is to share with you the two ETFs that I believe are really good ETFs, solid. If you want that broad market exposure to the chip industry, that's one purpose. I'm going to share those with you. And then first, I'm going to provide a little bit of background on the semiconductor industry, the ecosystem, if you will. I'm not going to take too long. I'm going to provide a lot of good reference sources. You can research this stuff yourself if you're interested. So, AI is going to be powered by the chips that run the computers that's going to do an artificial intelligence. I'm sharing with you a couple of articles. One's a press release from NVIDIA when they uh, release their Blackwell semiconductor processing unit platform. They basically say that this is going to power a new era in computing. And I remember seeing Jensen Huang at his conference just a few months ago holding Blackwell in his hand. It's about maybe 18 inches by 18 inches. And he says, I think he said it was $10 billion. It's like, whoa, don't drop it. I thought that was absolutely fascinating. Here's another article from techpowerup.com, basically saying that Blackwell is going to push the boundaries of scientific computing. Right now, today, artificial intelligence is the chips. Okay, it's other things too. Okay, and as um, we get to a certain point in this whole process of um, settling on what are the chips that are going to generate this, we're going to see companies adopt these things, and they're already adopting them, and they're going to start changing their processes, their products, their services, their software. And we know that Microsoft is a player; they will be a player. We know that Oracle is going to be a player. We know that, there's just lots of companies. I'm going to miss some of them. And these are companies outside the chip ecosystem that I just mentioned. But right now, the focus is on the chips. So, and we recognize that this is important. But who else recognizes the importance of the AI revolution and the role that the semiconductor industry is going to play is our federal government. We know that a couple years ago they passed the CHIPS Act, and the intent there is the federal government is going to award $53 billion in grants to these chip makers to help them evolve and get competitive. And what I've done is I've listed um, the awards that have been awarded, grants, if you will, about 25, 26 billion to date. You can take a look, you can see Micron Technology, you can see Samsung, Intel, Taiwan Semiconductor. They're not all American companies, but we do have an interest in Taiwan Semiconductor. We have an interest in Samsung. Clearly, there's geopolitical interest around who is going to manufacture and design and have control of the most advanced chips in the world, because there's applications that are civilian as well as military. That's another video. Anyway, let's press on. I'm going to talk a little bit about the ecosystem, and there's really about 6 levels here of the ecosystem. If you see the diagram on the left, it really shows a pyramid and a collection of semiconductor companies and where they fall within each level of the pyramid. And the pyramid is not to basically say, well, this is the top and this is the bottom. No, this is just a way of segmenting the ecosystem. And let me just give credit where credit is due. Go to steveblank.com. He does a wonderful job of providing a superb, easy to understand background, a foundational background of the ecosystem. And I'm leveraging heavily here from him, and I'm giving him credit because I think this is fantastic. It's about 2 or 3 years old, so some of the stuff might be a little bit dated, but I think it's really good and it provides a wonderful foundation. So, if you look at the ecosystem, you have foundries, chip companies, wafer fab equipment manufacturers, materials and subsystems companies, electronic design, automation tools, and chip intellectual property cores. I'm going to go just one level deeper on the next slide, just to basically give you some definitions. So, foundries are the companies that make the chips for other fabs or for others in their fabs. They buy and they integrate equipment from a variety of manufacturers, and it's basically they're using wafer fab equipment. I'm going to get to that in a little bit, and specialized materials and chemicals to design in their facilities, their fabs, for other companies. They don't have their own chips. They do the manufacturing for other companies. You have fabless chip companies, and these are systems companies that previously used off-the-shelf chips, and they now design their own chips. Okay, they don't have a fab. They will contract out to the foundries, and they'll do the manufacturing for them, if you will. You have integrated device manufacturers or IDMs. They design and they manufacture in their own fabrication facilities, and they sell their own chips. So we see companies like Micron Technology out of Boise, Idaho, and Intel, and Samsung out of South Korea. So that is a handful. Those are the first three segments of the ecosystem. Then we have wafer fab equipment companies. These are the companies that make the equipment that manufacture and produce the chips. Okay, they have the machines that physically manufacture these chips. Applied Materials is one. ASML is very prominent. KLA, LAM, those are all very big in the wafer fab equipment segment of the ecosystems. Then you have materials and subsystems. These are specialized materials and chemical companies. And they basically are part of the whole process of making sure that the wafer is right before it can go to manufacturing and processing. Then we have electronic design and automation tools. And we have three companies that are quite prominent. We have Mentor Graphics, Synopsys, and Cadence. They design the chips, they add their own designs where needed, and they use their own specialized electronic design automation software. And then we have chip IT cores companies. They do the design of a chip, and it may be owned by a single company. And we see companies like ARM. I've heard of ARM. I'm very familiar with them. Cadence, Rambus, Synopsys. So just a taste there of the ecosystem for you. Now, what you've been waiting for, I'm going to get to the ETFs. First, a disclaimer. I'm not your financial advisor. The purpose of this video is for information and education. It reflects my own personal opinions, my research. I'm relying heavily on research here. And my experience as an independent investor for more than 30 years. So please do your own research, consult a financial advisor prior to making any financial decisions. You will note that I am on multiple platforms. So not just here on YouTube, but I have intellectual capital on X, on Instagram, on Facebook, and on Threads. And I am profile verified on all those platforms. Look for the blue check mark. If you see Dividend Blasters with a blue check mark, that is me. My email address is drfinance999@gmail.com. My handle on YouTube is at dr.finance6447. It's all here for your reference. So I've covered this in the last few videos where I've talked about ETFs, and I talked about what are my core go-to ETFs. I also talked about what are my dividend income ETFs that I rely on for regular cash flow on a monthly basis. And those are different. And I also talked about another core ETF that I add to get broader exposure in addition to the ones I already have. And go back and look at those videos. You can take a look at those. Well, today, again, these are specialized ETFs specific to chips. And why do I invest in them? Because I like diversification. I want to have a broad exposure to a wide variety of assets, and I want to spread my risk. It's also cost feasible. I can buy access to lots of companies where I don't have to buy shares in specific companies. Full disclosure, I have several shares in NVIDIA. I have several shares in Broadcom. I have several shares in Qualcomm. Those are key investments that I have. I have a lesser number of shares in AMD. Now, I don't have all of these other ones that I'm going to talk about that are in ETFs. Too much money. So I'm using ETFs, and it's cost feasible. Okay, let's press on. So the first of the two ETFs is SMH. It is managed by Van Eck Semiconductor ETF. This fund invests in stocks of companies operating across IT, semiconductor, and semiconductor equipment sectors. They seek to track the performance of the MVIS US listed Semiconductor 25 index. So they closed today at $242.27. They are approaching the top of the 52-week range. Their expense ratio, it's 0.35%. So it's a little bit higher than the core ETFs that we talked about, like VOO or SCHD. It's even higher than QQQ or QQQM because this is specialized. It requires a little bit more maintenance. It's even higher than the covered call ETFs that I talked about with JEPI and JEPQ. Those are 0.15%. This is a little bit more because this requires a little bit more work. So 0.35% means that for every $10,000 you invest in SMH, you're going to pay about $35 a year in management fees to Van Eck. I think that's reasonable considering what you get. 5-year price return, 393.59%. Total return, so that's your price return plus your dividends reinvested, that's about 416.57%. Much more than the 5-year return of the S&P 500, which is a little under 88%. I mentioned that they are managed by Van Eck Associates. They were founded May 4th, 2000. They pay an annual dividend. Now, the dividends are very modest here because most of these chip making companies pay very low dividends. Okay, they're very focused on capital investments to keep competitive. It's rare that you find actually chip companies that pay a good dividend. One that comes to mind, it's not bad. It's about 1.5%, I believe, is Broadcom. NVIDIA pays a very modest dividend. They significantly just increased their dividend, I'm very happy to say, but it's still a modest dividend. You don't buy a lot of these companies for dividends. You buy them for growth, as I've mentioned before. So it's 0.43%. Dividend growth rate for the last 5 years on average is 4.95%. They do not have a streak. Okay, it's very tough for a dividend company or an ETF that invests in dividend companies to have a continuous streak of continued growing dividends. Key holdings, there's 26 of them, and NVIDIA is by far the largest. It's over 22% of their holdings, followed by Taiwan Semiconductor, around 13%, then Broadcom, about 7.5%, then Qualcomm, about 6.23%. Texas Instruments, Micron. I want to say one thing about Micron. They are primarily very different than NVIDIA or the Broadcom. They do DRAM, if you will, or storage devices. And then ASML. ASML basically is one of those wafer fab equipment companies. And then Applied Materials. And then Lam Research. And then Analog Devices. I'm providing you a couple of graphics here. So you can actually see what the 1-year total return and the 10-year total return are for SMH. 1-year total return is 84.99%. It's much higher than the S&P 500 of 24.49%. I do like that 10-year total return. And again, remember, total return, you're reinvesting your dividends. It's over 1,000%, whereas the S&P 500, 169.73%. That is Van Eck. Let's go to the next one. Next one is SOX, iShares Semiconductor ETF. Okay, this is managed by BlackRock. And this fund invests in stocks of companies operating across the IT, semiconductor, and semiconductor equipment sectors. They invest in growth and value stocks of companies across a diversified market cap. They seek to track the performance of the New York Stock Exchange Semiconductor Index using representative sampling techniques. So, this one's a little bit cheaper, not much, $7 or $8. And again, don't get too hung up on the price because the price is fairly volatile with these companies that underlie these ETFs. We are close to the top of the 52-week range of 243.63. Expense ratio 0.35%. So again, $35 for every $10,000 you invest. I want to say one thing about the assets under management, and I may not have mentioned this, that Van Eck is a little bit more than SOX. SOX is about 14.65 billion. Van Eck's around 21 billion. By comparison with like an S&P 500 ETF, these are small. And that's not bad. These are very specialized. They only invest in chip companies. So you're not going to have a huge AUM figure or assets under management. They're going to be smaller. Price return for 5 years, 295%. Total return, about 20% more. It's 316%. Again, much more than the S&P 500 of 87.73%. As I mentioned, they are managed by BlackRock, founded July 10th, 2001. Unlike Van Eck, which is a annual dividend, this is a quarterly dividend. Also, has a modest yield, 0.57%. I do like this 5-year dividend growth rate, 12.38%. And they do have a small growth streak, 3 years. I think that's pretty good. If you look at the projected annual dividend income given a 10-year investment, you are at around $58. Let me just go back to Van Eck. That projected annual dividend income, $42.93. So, you're not going to be able to drip significant amounts here. You're going to have to come up with your cash to do the investment and the reinvestment. The dividend's nice. I would say you do see a difference between the total return and the price return. And you see that in the 5-year basically estimates that I provided. Now, if you look at the graphics, you see that the 1-year total return versus the S&P 500 is about double, 45.6% versus the S&P 500 of 24.5%. It actually begins to separate a little bit more over 10 years. So over 10 years, not quite what Van Eck did, which was over 1,000. This is about 858% versus the S&P 500's 169%. Still very good. Why invest in both? And I like both. Broader exposure. Okay, you obviously can't get access to all of the chip companies with one of these, but I think you can get most of all of them, or the important ones, with both of these ETFs. That leads me to the next point, and I've talked about ETF research and analysis. A tool, it's etfrc.com. You can do a comparison between the two ETFs and see where the degrees of overlap are. Take a look at here. I'm providing screenshots, but go into the tool, check it out. It is free. You can subscribe for free and do some fundamental basic analysis between the two. And then if you want to get fancy, you can subscribe, pay a small fee, and get a little bit more functionality out of it. Right now, what this tells us is there was about a 71% overlap. So there's a good amount of overlap. And it also shows you here where the non-overlapping is. So for instance, where maybe, SMH may be a little heavier in NVIDIA. We saw that from the slides earlier. They had 22%. SOX has maybe, I want to say 10%. They're a little heavier in Taiwan Semiconductor. They may be a little bit lighter in advanced micro devices or AMD or microchip technologies. Check this out. I do think that investing directly in chip companies is well worth it, and I do that. And I do that because I like to be able to scale up or scale down my investment. I invest in these ETFs because I like to have that broader exposure as well as being able to spread the risk. across the market. As I've mentioned, I'm on Facebook. You can see my address on Facebook, on Instagram, on X, and you can find me right here on YouTube. I do want to give a shout out to some of my colleagues that are on social media, on Facebook and on X. Dividend Snowball. Check out Dividend Snowball. Superb resources. We collaborate a lot. And I will say that Dividend Snowball has really one of the very best discussion groups. We have a lot of very smart people comparing notes on dividend investments, but also not just dividend investments, investments. A lot of smart people there and good friends of mine. So I encourage you to check them out, as well as us here at Dividend Blasters. Also, check out Dividends R Us. They are on Facebook and they are on X, a very large group. Lots of smart people, very collaborative, very friendly. If you have questions, come to any single one of us. And then I want to mention finally a group that's a little bit broader, not just dividends, but really savings and investing. So maybe even growth stocks as well. So check out Saving and Investing for Beginners. They are on Facebook. Just superb platforms all around. And folks, that's it. Thank you very much for joining me today. I hope you found this to be informative and worth your time and enjoyable. So please give us a like, share the video with a friend, hit that notification bell so when our next video comes out, you are aware and don't miss it. And subscribe to our channel. Have a wonderful day. God bless.